Hello everybody, it's Gareth here from Paris Technologies with another in our video series on budgeting. Today we're looking at direct cash flow for small companies. And if you've seen the previous video where we talked about direct cash flow for individuals, it's very similar with one obvious difference. Companies leverage their balance sheet, and that's a big difference from uh, people who don't. What do I mean by that? Well, let me show you by sharing my screen. So the most obvious is companies give credit and get credit. Even small companies are going to grant their customers time to pay. So if you look at this customer, I'm invoicing in Jan and I'm only expecting them to pay in April. And on the same side, my suppliers are probably going to give me some credit. So here I'm buying something from the supplier in Jan, I'm paying them in April. This supplier I'm paying cash. This supplier, I'm going to accumulate things and pay them when I can. What I recommend when you're a company, a small company, is plan your cash flow by individual customer and by individual supplier. It's important. It's going to give you a lot more flexibility, and it's going to really give you an insight into your business. When you're small, you can do it by individual customer supplier. As you get bigger, you can't. Right. So once we've got that, the next thing we want to do is we want to bring all of those customers and suppliers together, and then we're going to add our cash costs. So the biggest almost always is going to be payroll, and after that it's going to be your occupancy costs, most commonly your rent. After that, you've got to have these other balance sheet changes that I spoke about. Now, the most important, or I want to say one that you must never forget, is plan your payments of VAT or sales tax individually on its own line. Every company I've come across that's in some kind of cash flow difficulty, they end up not paying their VAT, and that gives them a lots and lots of trouble because inland revenue does not appreciate that, and it's going to be on your case very quickly. I would strongly recommend planning this very carefully on its own line and watching it like a hawk. The other thing, of course, is that you're probably going to want to borrow some money. Maybe it's from the bank, or if you're lucky, you're going to be able to borrow from some family members. And then you're going to also want to plan when you pay them back. If you borrowing from the bank, they're going to insist that you show them when you're going to pay them back. Maybe your family is a little bit more forgiving, but you're going to have happy family members if you plan to pay them back and you show them when. And then finally, you have these asset purchases or asset sales, and you're going to want to have separate lines for those so that you can plan to buy things when you can afford it, and you're going to sell them when you need the cash. All right. And finally, you're going to be looking at this line here. What is the cash at the end of the month? And of course, the critical thing is that it should never go negative. All right. Once we've got things monthly, and I would strongly recommend doing your initial cash flow by month because companies have a nice monthly cycle, which is more predictable. But you can't end there because when you come to cash, you need to pay people on very specific dates, and you need to know exactly when you've got that money available. So the next step is to break out those monthly budgets by week. And what you got here, you can see I've got my budget here for Jan, my budget here for Feb, my budget there for March, and I want to split it by week. Now, you might notice straight away that I've done something a little unique in that I've split every month into 5 weeks. And I would recommend this because it allows you to use the same formula for any part of the month. It means that I can have the same Excel workbook for the first 3 months, the middle 3 months, the last 3 months. It doesn't matter. If I do this, I need to keep track of the ending date, the week ending date, and just how many days there are in that week. So you see there's 3 days in this week and 4 days in that week because it splits over the month end. That's the only little trick. Otherwise, it's really nice and useful to keep them split evenly like this. Just be careful that if I'm paying over 3 days, just make sure that's not a weekend or something like that. All right. So what I've done is I've taken my month and I've split it, and you can see here for January, everything's done and allocated. If I look at February, I still got something in the variance column here. I haven't yet planned for my loan advance. And if I look at my cash at the end, I can see that I'm going to need this money very early on. So I need to plan it for the first week. So I need to speak to my lenders and make sure that they are ready to advance me that money on a very specific date, and it's got to be in that first week. All right, let's update that. And there we go. Everything's good. Once I've planned everything by week, and if I just close that up, you've got what we consider to be the sort of gold standard in direct cash flow, which is what they call a 13-week cash flow, the first 3 months or 3 months at a time. Obviously, I've got 15 weeks because I've divided mine into 5, but it's the same idea. I'm going to take 3 months in advance, and I'm going to split every single receipt and payment by week. And I'm going to come down the bottom here. I'm going to look this over, and I can see my big issues are going to be at the end of Jan. I've got very little cash, and potentially when I get further down the month here, I could have some issues here if things don't work out. So I need to watch that. The next step in the process is start to capture your bank statement. For a small entity, I recommend keeping it simple. I would just capture things manually, and I'm going to show you exactly how I would recommend doing it. And you'll notice that I've done something that potentially you would find a little surprising, is I haven't captured the date. All I've done is captured the week. I'm just keeping it really simple. If you capture dates, you need to be really accurate at typing. If you make a typo in the date, you're going to get a very strange result. It's not necessary. All I need to know is what month am I capturing for, and what is the week. And it's pretty simple. If you're capturing your bank statement every day, which I would recommend, you know which week you're in. You just capture that the week number. Really simple. The key then is to capture this category accurately, because it's going to be one of these categories here that I'm going to report against. And I've just got a very simple little formula here that just checks that I can see that category in my list. As long as I can see it, it's going to give me a green dot. And that's all I need. It's as simple as that. Don't overthink it. Just keep it simple. It's going to work. Over here, you can use any kind of aggregating formula. The most classic would be sum if or sum ifs. I'm lucky. I'm using a cube to do it. And so I don't need to worry about formulas. So you'll know that you'll realize there's no formulas over here in my model. It's an actual number. And if I just change that, and let's just make it, let me just make that 753, just something kind of obvious. All I've got to do is come in here and rebuild my cube. And I've got an elation cube sitting behind here, and I'm accessing it through this this add-in here called Power Excel. And I'm just going to rebuild the cube. Nice and simple and easy, and it's going to give me an updated value here, 753. Simple. Okay. Once we've captured our data, we now need to start our analysis. And you want to do this analysis in this way, which is you want to start to blend actual data with budgeted data. So here you can see I've got what actually happened in the first week of January, and I can see that I've got $7,000 left in my bank account. Then I want to blend and bring in 2 weeks of actual data. And you can see, yes, I made that payment. Fuel, because I've paid my rent, I've paid my vehicle leasing, and now I've just got to maintain the fuel every week. And I don't need to worry until I get to week 4. So let's just advance another week. Yes, I made my fuel payment, and now week 4 is the most important because I have to make payroll. But yes, I've got enough money in the bank to do that, so let me go ahead and make payroll. Here's my payroll numbers, actual numbers. All right, I've got $1,000 left in the bank. but I've got a little bit more than $1,000 to make payments against, right? I've got a supplier that's important, and I've got payroll taxes, and I've got utilities on my rented property. It's going to be important that I get this $1,000 in for my customer, or it's going to make life a lot simpler. What if he doesn't pay? Well, I've got my second tranche of advances from my lender, and so I'm going to have money. So my plan here is, if my customer doesn't pay, I'm going to pay my utilities, but I'm just going to delay paying the payroll tax because I've got a few days. The inland revenue doesn't require it paid right at the end of the month. I can pay in the first week. So that's what I will do. Let's see what happens. As I feared, the customer didn't pay. So I executed my plan. I paid my utilities, and I haven't paid my payroll tax. And I'm going to have to come over here and I'm going to have to make an adjustment. So the final sort of step in the process is, let's review what actually happened at the monthly level. So you can see my original monthly plan, or this is what actually happened, and this is the variance against my plan. I was short on that customer, but and of course I'm short here where I didn't pay this PAYE, but everything else was fine. I actually made a few savings, and that's just the nature of it. I budgeted a little higher, which is good. All right, now I need to come back and adjust. So that's the final step in the process. Back to the original budget. What I've learned now, based on what happened in January, I need to adjust for February and the rest of the year. And that's the critical element, is that it's a circular process. Once I have my actual information, I go back to my budget and I adjust. And of course, the key to doing this at a really robust level is that all of your workbooks and all of your technology must work seamlessly together, so that it's just about the business and not about the Excel or the hassle of keeping it all keeping it all together. All right. I hope this was helpful to you, and I'll see you at the next video.